We are back at it again here with another video with Invest for Tomorrow. To the first time viewers and investors, welcome to the channel. To all subscribers, welcome back. Here we are with the SPY, the S&P 500 index, continuing to have trouble to get itself back up after rejecting the key resistance levels that I've talked about at 385 and 387. And here we are coming down to test the support of 380. It's trying to bounce off of it again, and we're going to break it all down in today's video. But today in the morning, the SPY had so much volatility that it presented opportunities in either direction, right? And our SPY bot sent out a bear indicator at 9:50 a.m. And from that moment forward, outflows crossed the midpoint to the downside. And within minutes, puts went up 70% plus. A few minutes after, at 10:15 a.m., our SPY bot sent out a bull indicator and inflows crossed the midpoint to the upside. And call options went up 100% plus within minutes, guys. If you guys want to receive this clarity and edge over the charts, check out the link down below in the description to the Discord, getting connected to our 42 vision indicator, getting connected over to our bots, and becoming part of a growing community of investors, all looking to learn and grow together by using these resources to maximize in either direction, whether stocks are going up or going down. So here we are with the SPY pulling downwards, and it actually got a bear indicator. We're going to look at it together on the 5-minute after that last bull indicator and hitting this peak, and things have been going down for most of the day as well within the volatility. So this is actually very important where we're at and why the market is going down. We're going to break it down in today's video, but before we do, I want to share with you guys the home run opportunity that was mentioned this morning over at the Discord. So the home run of the day was spectacular and beyond expectations. And if you guys want to know about these stocks early on in the pre-market and receive this edge and clarity over the charts, check out the link down below in the description to the Discord. And by joining, you'll become part of a growing community of investors, all looking to learn and grow together. So the home run of the day was from our Tesla bot. It sent out a bear indicator at 9:55 a.m. And from that moment forward, the outflows crossed the midpoint to the downside, as you see there in the chart. Further weakness on 42 vision there as well, and put options went up 150% plus within an hour, guys. If you guys want to receive this clarity and edge over the charts, check out the link down below in the description to the Discord. We look forward to having you join us, and we strive for opportunities like these every single day. Let's jump into these charts. So here we are with the SPY, the S&P 500 index, and breaking out of this consolidation here between the 380 and 387 area. And now it's going below it, and it's been trying to bring itself back up, and it's actually hit 379. But why is the market going lower today? Everybody's asking themselves that question, and there's two reasons why. The main reason, we're going to break it down in just a moment, but the quick one right now is the fact that Google's earnings, Meta's earnings, have surprised the markets. And today, after hours, we have Apple, and then we also have Amazon. Everyone is getting shaken up because of that. And if you look at Apple stock, it's actually been in a downward trend towards its earnings. This has been a straight shot down. Now, I'm going to share with you guys another big reason, because I actually mentioned this already on the Discord. I've mentioned it here in the videos, and we're going to break it down today, the day before the data is released, because it has ties with what the Federal Reserve is looking for, guys. And we're going to break it down in today's video. I'm going to pull up the inflow versus outflow and bull and bear indicators, which you can now gain access to as well. The link is down below in the description to the 42 vision indicator, getting connected over to our bots, and becoming part of a growing community of investors, all looking to learn and grow together by using these resources to maximize in either direction, whether stocks are going up or going down. I'm going to pull up the inflow versus outflow in today's video as well, which adds an extra layer of confirmation and gives us that edge within the volatility. So since yesterday, the outflows crossed here on the 30-minute. It's been struggling to get back up. It briefly did. That's this volatility we saw today in the morning. Outflows crossed, and it's been in a downward trend since then. And it's been under a bear indicator since way up here at 383. And even though it crossed it today, no bull indicator popped up to cancel it. So that bear indicator has been dominating over the chart. Now, you're going to see something pop up here on the screen. And this is the data that's going to be released going into tomorrow. I've actually briefly touched based on this on the Discord. I've mentioned it here in the videos as well. But today we're going to break it down. And as you see it popping up there, we have PCE that's going to be released, which is crucial. The Fed loves that. for a measure of inflation. I'm going to show you guys in just a moment. And also the consumer sentiment, guys. That's going to be big as well. However that reacts, that could have a big impact on either this bear indicator getting canceled and also the earnings of Apple and Amazon, or this bear indicator going ahead and staying in control and dominating over this chart. And these outflows going into not just the 30-minute, but also even further into the 1 hour. And it just got a bear indicator today. Outflows crossed yesterday. We talked about that briefly as well. And the further this pulled away, there was no bear indicator just yet. And we were watching for a bear indicator that would cancel this bull indicator and see how much strength it would have. So going into after hours today is going to be crucial with those earnings. But this data release tomorrow is going to be important. Why? Because PCE is the Fed's favorite measure of inflation. And Jay Powell stated that back in the August meeting. He even stated it, I believe, at Jackson Hole. Don't quote me on that, but I believe he mentioned it. And it's important because this is the index that is the Federal Reserve's preferred measure of inflation. And it actually removes food and energy costs. And I just typed it in right there. Is PCE the Fed's favorite measure of inflation? And so many different articles and sources go ahead and state why. And Jay Powell himself stated it earlier this year. So why does that matter? Well, PCE, if it comes in hot, well, that's something that they're being data driven off of, right? Remember, the Fed has stated they're going to be data driven, and that can actually influence their decisions on how are they going to be more aggressive or more dovish. Something to keep in mind. CPI is just as important, but PCE has the markets a little shaken up. And then also Apple earnings, as we stated and showed here earlier in the video, that it's actually just going in a straight shot down. It doesn't mean it has to stay that way. Look how these inflows are trying to pick up, but they're still way off that midpoint, right? It needs to pass it to actually start reflecting some strength into the chart. So something to keep in mind. But right now, those are the things that are going on all at once. And then another thing too, I compared this consolidation here from the 380s to the 387 mark as the same consolidation from back here on October 4th and October 5th when things started to slow down before we went back to hit new 52-week lows. Now, it doesn't mean it has to do the same exact reaction or be the same, but as you see popping up here on the screen, I showed my analysis and what I was looking at based off 42 vision and the inflow versus outflows as they slowed down on the 1 hour chart. And if I pull up the 1 hour chart here as well, you could see why. Those are the statements I shared. It wasn't guaranteed to pull back, but things were looking pretty overextended. And here's the 1 hour chart today. And we had inflows actually start to slow down yesterday. Outflows are starting to dominate. Bear indicator popping up here. And we're breaking below that area. And look what happened last time, right? Those outflows began to dominate. Bear indicator. And things dropped really, really quickly. I mean, from way up here at 370s all the way back down to the 360s. Now, again, not guaranteed to react the same. If Apple and Amazon come to save the day, that's going to be a huge, huge difference of what we see going on right now, right? This is just key levels to watch and what's going on based off the history of the chart and what it's looking like right now. And then also, if PCE doesn't come in as hot as expected, it could actually start going hand in hand with the whole reason why the market started to rally here, which was last Friday when Fed Daly came out and stated that it's time to start talking about slowing rate hikes. So we're going to see how PCE reacts. We need to see how Amazon and Apple react. But right now, things are looking pretty weak. Outflows are dominating. And until these inflows cross back up, there's still going to be some weakness here in the charts. And especially this bear indicator needs to get canceled by a bull indicator. So the first support that I'm watching here is 380. Below that is 377. And below 377 is back down here towards 373. I'm going to be watching those levels very carefully. These outflows as well, if they continue to pull away from the midpoint. And based off the chart's history, we've gone as far down as minus 4.94. And we're only at minus 4.09. So something to keep in mind here on the 30-minute chart. And then also the 1 hour chart, it still has room. It's gone as low as 5.51. And even 8.7, right? And we're only at minus 3.08, guys. So I'm going to be watching that carefully. This bear indicator just popped up. Definitely needs to get canceled by a bull indicator. And to the upside, If this finds support and it doesn't test those levels below, the first resistance level I'm watching is 385. The one above that is 387. And above 387 is 395. And then 400. And we could start talking about higher levels based off the chart's reaction if we head that way. But right now, we're pulling downwards. We're under a bear indicator. And outflows need to switch back to inflows. I'm going to be watching that very, very carefully here on the 30-minute and 1 hour chart. As always, guys, thank you guys so much for watching, and let's make some money.